Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the first week of November. Happy Halloween! If you get this, it is coming out a day late. I actually did this video last night on Friday, and for some reason the audio didn't come out, so I had to come back to the office today, and I'm going to redo it. And it's going to be done a little bit better because actually that's how I usually do things. The second time around, you already have it in your mind, and you've already done it once, so it's gonna come out really nice. And I want to also break this out for the newer traders out there that are joining us, and some of the trial members and new members. Welcome to Day Trading Radio. This is a part of the membership package that you get each week on Friday, sometimes on Saturdays if I have an issue with it. And basically it's a video that goes over the stocks that we're going to be trading next week. But I want to get this a little bit more organized, and really there's so much always to cover, and these videos become so long, and I don't want them to be that long because we don't have that time. So a little bit more organization on my part will make it easier for you. So we're going to break the videos down into what we do. You know, we're traders, so I'm going to break it down into what we call, the first part of it is going to be market radar. That's something where I give a technical read on the overall markets, usually the S&P 500 benchmark index, NASDAQ, anything that's really in there. But usually it's the overall markets we take a look at, and I give you a technical read on that, the charts, everything, how everything's looking, momentum, stochastics, indicators, sentiment, seasonality, anything news coming up. But just basically that's called a market radar. It's a forecast for the markets going forward. Then I want to talk about some of the pre-market poppers, because those are really three opportunities that we have during the day to make money. All right, and the first one is the pre-market poppers. When we get up early in the morning and we get in there, these are low float news plays, and the news starts to drop at 4 o'clock, but most of the news gets released around 6 o'clock in the morning. And I'm not in at 6 o'clock. I'd burn out after a while getting up, but a lot of people are, and that's the time to get into the chat room. So if you're able to get into the chat room at 6 o'clock, there is traders in there, and they are discussing trades and stuff, and that's where a lot of the news comes out. And we concentrate on this. When I get in around 7:30, we jump right into this, and we look for these stocks that are making pre-market movers, the stocks that have news, and we go. I actually have I have a scanner that I run. It's a simple scanner, and I think anybody's charts or anybody's charting package could run a scanner. It's just pre-market volume, and it's the biggest volume movers of the morning. See if I can pop this out for you here, and I'll bring this over. And if I can bring this over, this is something that I run. It's called low float flyers, and my conditions for this are: the price has to be under $5, the float has to be under usually 10. What do I have here on the float? A million share float, but on the TC2000, this sometimes gives me a bigger flow. It just doesn't perform like I want. There's some glitches in the program, but I try to keep that float real low. And then the price history I have moving up. That's just a kind of an internal little indicator they have that the price is moving up. And I let this run in the morning. It runs right when the market opens up. Well, when the pre-market opens up, which is 4 o'clock for most U.S. stocks. And these things will pop up on the screen like they are. And I'll come in and we'll see, percent change. You can see big percentage gains on these. And you get the latest float. As you can see, the floats are higher than that 1 million or 10 million. But it really doesn't matter too much, as long as the floats are in the millions and not in the billions. And as long as the price is, under $5. The golden price area tends to be between $1 and $3. If you get too cheap into the penny stocks, I don't like that too much, and you get too high in the price, it doesn't take on the same. There's a sweet spot between $1 and $3. So I just look for the stocks under $5. And this is my scan. Now there's others, you'll get more stocks on here, but I don't want to have tons and tons of things. Lots of times the Qs will come up here, Apple. There'll be high volume stocks, but we're really looking for a condition of news, low float, low price. And that's when we get the momentum traders. And remember, this is pre-market, so you don't have many of the algorithms. You don't have you don't have stops, or excuse me, halts going on. Volatility halts where the price will get stopped and things will calm down and it'll reopen. So on Friday, we did get into Friday we did get into AGLE, and we'll start off looking at that. Well, actually, we'll start off on that when we get to that video portion of that. After the pre-market poppers on the video, we'll talk about futures scalping, and we do a lot of scalping on that. That's another opportunity that we have, and these are considered, day trades. Trading with inside the close, not holding anything overnight, multiple days, excuse me. And we concentrate on the MES, ES, SPY. And I say options on this. This is on the futures, on the MES, the ES futures. The SPY, you could actually trade options on our scalping things because we pay attention to divergent setups for this. This is key because that is the SPY options. If you have weekly options that are in the money and you have a good divergence, say a 5-minute divergence or maybe even a 60-minute divergence or a good trending day, you could make some good money trading SPY options, like leveraged options too. The SPXL, the SPXU, the SSO. There's all kinds of leveraged options you can get, and if you have a good trade, you should take advantage of those. And if you're not familiar with those, you will learn those. And then, of course, we're going to look at our HPS setups. Our HPS setups are basically swing trades that go on the HPS site, and they're quality names that are setting up using our HPS indicators, or what we call it, the 5-indicator method. And the 5-indicator method, I'm taking patterns, pattern recognition, stochastics, support and resistance, reversal candles, and a couple other things that we like to add into the formula. And we want to have 3 out of the 5 of those things in a buy or a sell direction, depending on how we're going to trade this. But we want to have multiple indicators lining up, and that's what we could consider a high probability setup. And they get listed on the HPS watch list, where you get sent those trades when they trigger. And there's a few stocks right now that are active on that, and we'd like to go over those. So this is in the future. When we do put out this HPS watch list, this is how it will be broken down. Market radar, pre-market momentum poppers, which will probably be a review because they happen, again, this happens in the morning, and you can't really predict this. You just have to be there for it. You really got to be there for it. I can't stress how much money you can make on this. You can make hundreds, and we're going to get into that in a second. In future scalping, that's we're doing great on that. And with swing trades, we've been kind of holding back on the swing trades because of the market trends. You don't want to get long if everyone's expecting the market to go down. I mean, it's just going to sink a lot of the stocks. You're going to end up holding on to things longer and just kind of getting washed out in the market. So the swing trades are not always there. It depends on market conditions, but they are starting to appear now as the market seems to have been putting in a bottom. And that starts us off with market radar. Let's go to the market radar. So the market radar, we're going to start off with the S&P. And now I have a lot of SPX. I have a lot of lines on this, and I don't want to confuse you, but I'm a big channel trader, and I understand channels a lot. And we actually had this big candle, and you see where we ended. We ended right around 3,900 on the cash. Now, a lot of analysts, a lot of talking heads out there have been. There's two sides of the story. It's one that we're going to go down and take out the lows, the June lows, which we did a little. We did take out those June lows. But there's other people that expect us to go down a little bit further, maybe 3,200. But we got down here in the 30, what did we get down here? 35, 30. I mean, we're a few hundred points away from a level where a lot of people are looking. And that's a hard needle to thread, because you have to be perfect if you want to get down there and be able to be in the market at that time. It's very difficult because the market doesn't always, I'm not going to give you those opportunities. Everyone's looking at that opportunity, waiting for that opportunity. Most likely, the market's not going to do that. And that's just logic and simple understanding of psychology in the market. People are not. So we had a tremendous divergence. Well, actually, this reversal candle probably was a divergence too. There we go. That's the candle. That was a big divergence. You can't even see it, but you see that line and how at that point up here, right up here, where the stochastics are, you see how they're above that 20 line, and they've been pushing up since the lows, but that candle started lower. This candle was lower here and reversed. So it was lower, taking out the lows, but the stochastics didn't take out the lows. It was what we call a hidden divergence. It was an engulfing pattern. It was a rotation play. It was everything. There was a perfect setup. And from that point on, we rallied up, and we kind of got overextended, and we're now kind of embedded here. And now the thing is, as the Fed, and everyone's talking about this, there are still these landmines out there, these possible news events that could happen between Russia, China, Taiwan, the election. I mean, there is still some wild cards out there, and we're right in the smack dab in the middle of earnings season. Now, that's another positive, I believe. I believe that the big tech stocks have come out, and they are heavily weighted in the index, especially in the S&P. So they were affecting a lot of things. And now that the earnings are out and all these stocks got corrected a lot, everything got taken down. And if it got taken down and moved back up, that's fine. But it still got taken down. Amazon, Facebook, even Apple got taken down on that day, but it reversed. Meta, of course, Facebook, Apple, Tesla's hanging in there, but everything has come down. So now that we have all those kind of reset, that's I would say a little bit more bullish for the overall markets. We discussed that too, because here's Friday's market. After Apple came out and Amazon came out and they had such a bad report, we actually had this is on the 5-minute. This is actually on the 15-minute time frame. Now the 15-minute time frame, we don't look at it that much, but look at the divergence it gave us. All right, that gap down here, right here, this candle, and that higher low, and that rip here, and it ripped really good to 3,900. Now, it's a toss-up at this point, because at one point, everyone down here was looking for 3,200, and the market ripped. Now, at this point, everyone's looking at 4,100, 4,100. That's about 100, 200 points higher. A lot of people still calling us a bear market rally, that we are going to go down lower. So we're kind of up at this range again, but we're holding. We're holding pretty good. I would say that's a great sign of strength. But barring any negative news going into Sunday over the weekend, which hasn't happened yet, barring any, I think we have some more upside. And I think we have upside because of these indications. The indications that stochastics are embedded there on the daily. Do you see how they're flatlining here? This is what I really wanted to show you. They're not really turning over aggressively. They're starting to turn back up. But another key time frame, which we don't look at that much, but when we do, and we start to see that rotate back up, that could give us a major rally. The major rally here, starting back here off the June, July lows, you can see the stochastics rotated up, and we got this nice rally. And again, each candle represents the time frame you're doing. So a candle here represents 1 full week. So this is 1 full week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. We always know our general guidance and what should I say? What we look for on a rotation in a normal market, I look for 5 to 7 candles to make that rotation from oversold to overbought. And this, from the overbought kind of, we do have about 5 to 6 candles here. And before we got overbought, and then we kind of rotated back down. Now we're starting to move back up now. Again, look at the stochastics. They're hanging here tough. I think the only thing that derails this is real bad news, which, you can't say that, you can't count that out. So there is still a little risk out there. This is not clear sailing by any means yet. All right, my buy trigger was 36.50. We blew through that trend line, right, this green line, and we continue to go. I think we have more upside going into next week. And yeah, I think also that 4,000, 4,100 level is becoming a self-fulfilling prophecy maybe. And maybe when we get up there, people are expecting us to pull back and we don't pull back, and we kind of break through the trend line. And then we have a major trend change. And, maybe it's off to the races because the highs are not that far away. All right. A little education that comes along with this. And again, looking at the upside on this, when I place these channels in here, you might say, well, this channel, your channel lines are all over the place. Like here is okay, here's okay on the closing prices, but here we kind of broke through it, and that's on the weekly. Let's go to the daily. You're going to be able to see it better. See the pivot, the main pivot at the highs always starts the trend line. We come down, and what happened here is we gapped up again. This is what we kind of call a runaway gap, but it reversed and left an island reversal right here. And this was I put an arrow there. That is our main, kind of return of the scene of the crime type of thing. We had a nice little pop, and then a reversal off of that and been selling off. And look at where the closing prices are, all right? So we kind of came back up to it. At this point, this trend line, actually put it in between this one and this one, and seeing it gap up above that doesn't really bother me because we came back down, and I said, you know what? You don't want to adjust that trend line. What you're going to do is you're going to watch this was an artificial pop, and what happens is the price will come back into the channel and then retest the channel, and we won't retest up here if there was like you would drag that trend line up there, but you would retest the original trend line. So what happened is we sold off, and we came up, and guess where we tested? If we extend that line, we came right back to that original trend line. So it's not this extension here. And now, we kind of had that island top here too. We had an island top. Now we're through that one. We had a pretty good candle today, or Friday. And now that this is Saturday. And yeah, that's that channel that we're looking at. Now if we go out further, the big picture here, the same thing. You have a nice pivot at the top, and I'm looking at the average closing prices here. And the retest. So we kind of broke through it, came back and retested. And that's why I put this trend line in right at this spot. I always put it on the retest because lots of times that first pop is usually in either blow off or some type of news that kind of pushes us through there. And then once we come back into it, we want to see how the market reacts to that same line. And we come back up to it and we held it. And that's where that trend line really goes. So extend that trend line out and trade it when you get up there. Now, what happened here? We had a nice rally, and we got through it again. But we came back to it and then retested it. Now, there's a downward trend line. Comes all into play. It's right around 4,000. And we have the rising trend line, which we call a retracement trend line. And that's right about that. And then you have this top of this trend line. So look at three lines. Maybe, and the 200 period moving average right around that 4,000. Obvious to see, that we could get up to that level. All right. So you don't think you have to be a genius to see that everything lines up here. Everything is lining up. News will play games with this market. So any type of negative news, you have to say, all right, certain things will break down. But look at that level right there. Impressive right now. One more thing I want to say about the S&P 500. When we're doing our scalps and stuff, typically we're looking at the 1 minute and 3 minute time frame. We're also looking at the 5 minute time frame. Sometimes it's great to look at that 5 minute cash chart, the SPY or the SPX, and make sure you're looking at that 5 minute time frame, because a divergence on the 5 minute is usually really, really good for a long-term move. Now there was a perfect divergence here between the close and the open the next day. The higher stochastic rotation there with the low, that was textbook. And look at the huge move. This was coming out of a kind of a falling wedge triangle pattern. And we also got close to that underlying trend line. Let's see if I can... And we want to watch that. We want to kind of keep that in mind, especially, here's another great divergence on the 21st. That happened at the close. And the next day open, and that gap down, and we turned back up, and that was a tremendous buy signal. And then we kind of watch some of these. I'm gonna zoom out here. I got an email over the. I just looked at the email from the last video I put out. Well, it was actually a comment on the video, and someone said I haven't been seeing any 5-minute divergences, and I did a fast look, and I saw plenty of them. And I don't, here's one right here, 3 o'clock to 4 o'clock, and yeah, a lot of them are coming in at that 4 o'clock time frame, which is harder to trade because you don't want to hold into the. But it's the next day. I understand that, so I don't really even trade too much into that last half hour. But there is good divergences to be had at any time frame. One more thing, if you do get a 5-minute divergence, you tend to get some follow through. And again, pay attention to that 9-3 rotation. And even if you get an early divergence, give it some time. And this is also when you need to step up with your contract size. If you do trade in the futures, for just argument's sake, and if you trade 5, step up, trade 10, or you trade 3 or 1, trade 5. Because those are going to be your best trades, and that's where you're going to make your most money. The steeper the divergence, and that's all I'm about. Next week we're going to go into next week, the beginning of November. It's probably going to be an excellent trading week. And we really want to take advantage of that. So next week, I'm going to do my best to step up and really just make sure we don't miss any divergences on the 5-minute, 3-minute, or 1-minute. I want to set up my charts a little bit different. I'm going to have a 5-minute, 3-minute, 1-minute chart all up for everyone to see. It's going to be a little bit different. And we're going to crush this market next week. And we're going to just, it's going to be pretty good. So I'm looking forward to that. We'll move on to the next section right now. Let's go to the next section. We're talking about early morning poppers or pre-market poppers. And let's just, again, I wanted to show you a couple of those charts. Now, we try to get in. Usually there's about 4 or 5 of them a day. Again, the key is to get there early in the morning. Here's one that had some news. Whenever you see a yellow circle, it's because we get in at that point, and I circle it. And I got in early, and I just said, you know what, we're going to circle this one. The first thing we want to do is see what the news is. If the news is tangible, pretty decent news, and everything else looks pretty good and it hasn't taken off yet and it has this consolidation before the open, it tends to pop at the open. But the number one criteria is quality news. It has to have something there. It can't be just smoke and mirrors. I would like to have something, be it a good results in a trial, something like that tends to get these things really going. You'll see them being picked up on social media. People will start to get it, but the early bird gets the worm, and you have to be in here early. So if you're serious about trading, I'm telling you, get in here at 7 o'clock, 7:30 when I'm in here. We'll point them out. We'll get you in. We'll get you out. These are going to be fast trades too. So this is also important. If you're trading, underneath a certain amount, and you have to have enough trades, or you might be trading using the pattern day trading rule being applied to you, and you only could trade three trades in a 5-day period. That could hamper you on some of your trades. You don't want to get in and out 3 times in a week in a 5-day period. You're going to miss some of those. That's something that you have to deal with. So this was a good one. This actually, from where we pointed it out to where, up by where the high was and most of the day, that was up 50% right from there. From the open where it gapped up, I mean, the day before it actually gapped up, and then the pre-market it moved a little bit more. I mean, but that's a 50% move. I mean, where do you get 50% moves? You just have to be in the right one. So that was one. QNGY. This was the other one. There was two that came out on Friday, and I looked at both of them. I picked that one, but look at this one. QNGY. You can see where I circled it at the same time we got in. I said, all right, this one's not showing up on my radar. It's just starting to move. And boy, did it move. It took off at 9:30. It rocketed 131%. It doubled. It went from $1.81 to $3 or $4. That can make your week, that can make your month, and that can make your year. And then it actually held up pretty good going into this week. So some of these actually could get some follow through, but they show up. This one is starting. I just pay attention to this one going into Monday. This is showing up after hours for me. After hour mover. Started to see. Let's take a look at the volume on the daily. Oh, that's interesting. That's the daily. It seems to have been halted here for a while and then gapped down, and now it's kind of popped up here at 280. Something's going on here. Something's going on here. CVU. Just keep an eye on it. I'm going to write it down for us just so we could watch it in the morning. I don't know. I'll circle it here too, even though it's Saturday. I will circle that and see where we could go with that. Go back here. Look at this. Let's trade up at 11. Let's trade at 2. Probably not worth anything here. All right. Anyway, that'll be Monday morning, early Monday morning. We'll be taking care of these. Sorry for the interruption there. Needless to say, I'm still holding my GMVD. It's down, and again, sometimes you'll get these pops. Well, unless you qualify them, and again, sometimes you won't. You get excited. You could find yourself down a little on these. It's not the end of the world. You're dealing with penny stocks most of the time, and like I said, quality is better. The magic number is between $1 and $3. Penny stocks like 17 cents, 20 cents. They work sometimes. They work, sometimes they're 20 cents for a reason. So I tend to, kind of talk about the just a little bit higher stocks over $1. Like, Duo this week. We jumped back into Duo. I think we all made a lot of money on that. That had a nice little run over $1. Got up to $1. It got up to $2. It doubled. These are doubles. It's crazy. All right, let's and again, those are going to be early in the morning, and they come in the morning, and we deal with them in the morning, and hopefully we're not talking about them in the evening and holding on to them. Now we're going to go over some of the future scalping today. And I did a video before, just kind of talking about some scalping. I don't know if you got that. I sent it out as a public video, just kind of talking about some of the results we've been getting with the trading the divergence method using the MES. And it's been really good these last 2 weeks. I've been really on point on these, and I want to continue with that. So let's just kind of go over a couple of those and what makes those trades so perfect for us. Last 2 weeks, I did a review last week, but this is going back for 2 weeks. Basically, 47 trades, 85% success, almost 86. 5 short trades, 4 successful. One I missed one, a loss of 12. It's hard. Sometimes it might be hard to read this. I can't even read it sometimes myself. But basically, it kind of gives you some of the stats. And again, as you know. When I'm trading, I'm trading usually 1 or 2 contracts, and I'm doing a lot of other things. So I'm trying to place those trades so you see real live trades and understand how fast I'm getting out of them. I'd like to push that up a little bit more. I think this week is going to be a great week on that, and my goal is to start off between 3 and 5 contracts. So overall, that would be I think really good. So we're going to really just continue to keep the winning streak going. Well, it's not a streak, but it's not a 100% streak. But this is great. These are great results, and they're all based off of divergent setup. So they could give you some. They give you some. We're talking about points here. It's 45 points overall. 45 points. That's and if you trade in the MES, it's $5 a point. If you trade in the ES, and you just did this with the ES, that's $50 a point. Now, if you just were trading one contract, that would be $250, something like that. Yeah, that's big time right there. That's big time. That's just one ES contract, one E-mini contract. Now the MES, which is 1/10 of that. So big difference on that. Of course, the risk comes along with that. So you have to be prepared for those risks. You have to be focused. You have to be in front of it. But I think you could really do this. I think with the right guidance, we work as a team. I'm really trying to push that forward, going forward, as getting a good team of traders together in our room and really focus on that and locking in trades. Now, future trade is hard when it comes to understanding the direction of the trade and how fast you want to get out. Sometimes you get in, like on Friday, you could have gotten into a trade on the divergence early in the morning and gotten out at the end of the day, and and probably would have made your month. You could have loaded the boat. But that's a hard call to make, with the Apple and Amazon getting crushed, and everyone thinking, but boy, what a reversal it was, and it was off to the races. And that actually was a good reversal. That was a 5-minute reversal. It was a great reversal for us. All right, I just came across that. I've been working on some of the scripts and stuff, and I always stress that you shouldn't let these scripts run 24/7 without supervision. That's the important thing. People get the idea if they get the script and they're able to run it on their own machine, that it's just going to be a cash machine, and that really depends on market conditions. It is very hard to, because algorithms are running this market, and algorithms could pick up on things, and they're always changing. So the market conditions are always changing. And when I was writing these scripts and kind of writing some divergence setups for the Ninja Trader, I have many. If you take a look here on the screen here, where my percentage is really good because I'm able to push the button, get in and get out, and not have any, be able to see the moves real fast. So I'm running about 85% success. The bot here sometimes won't pick that up. It'll be it'll be caught in news, or will trade overnight, and those time frames it'll drag down your percentages. You don't want to trade all the time at night or at a certain time at the end of the day when there's a lot of volatility. So you have to remember, this is not something that I recommend just turning on and going. But I just ran across something. I was just going over my old scripts here, and as you can see, there's plenty that I worked on here. There's some that come standard, but I got my super signal, of course, the bull flag, the bear flag, Thunderbird 1 minute, Thunderbird short, long, short. I had one. This wasn't one of my original ones. It was called a Thunderbird Auto Stop, and it has a safety feature on it. It's kind of, we're using a zigzag indicator, and so I said, well, let me just run this on my. Let me just run this. I want to go back and try to work on this a little, maybe tighten up some of these things. And I just ran it on the 1 minute, and this is going. I'll just run it back a couple weeks, and again, same divergence signal, but it adds a little to it. It has a little better safety factor. I call it the safety net. That that prevents it from taking losses. It'll cut the gains off before you take a loss. I have to explain a little bit more in a more in-depth video when I break this down, because I have a feeling we're going to run with this. Because take a look at these results I'm getting, and I think I want to give this out to the upload this to the bot channel, so those members will have access to this. I'm going to do this next week, part of the workshop, because we do have a new bot forum coming in here where we're going to let some traders have access to the bot and the code where they could do some changes on their own. Now there's going to be a select few that do that, and with an agreement that they're going to share their findings, and we're going to use it in the forum as a trading group, our RockBot forum, trading forum, which I'm building right now. This is called my auto stop script, and I just ran it. This is exactly what I'm talking about. Take a look at this. Here's our regular 1 minute. Actually, let's take a look at our 5 minute buy script, which I say that's a really good script to use. And what I'm doing is I'm going to put on a 4, 10, 5 contracts, take 3 off on the first profit, trailing stop. I'm not even going to keep that trailing. I'm going to keep that trailing stop real tight, because that's what I like to do. Get the trailing stop to trigger right after you take the first profits and stuff. And we're going to go out 2 weeks. Now you can see this. Even though I have a good results on trading my divergences, every so often we'll get a negative result on trading this. And I'm just going to go back on this. And remember, there's multiple time frames. So let's see what happens here. See, it came back down. It actually was down a lot. It took a lot of trades over the last 2 weeks. This is way too many trades. 379 trades. That's a lot of trades. And again, that's sometimes because of the chop or the overnight trade. Sometimes it gives us a lot of false divergence and stuff, and you have to be careful on that. You have to know when to trade that, when not to trade that. So I'm saying, all right, I said that's not a good result. It's trading 67%. All right, that's not, it's positive, but definitely, I don't want to see any type of losses. Not at all. I mean, first of all, I'm using this to identify the divergences. So next thing I want to do is check. I'm saying, all right, let's take a look at the 1 minute time frame here, the 1 minute bot here. Thunderbird 1 minute bot. Excuse me for just taking a little time to do this, because I think you're going to enjoy the results of this. Now this is the 1 minute. Just going back 2 weeks here. And again, the market's been selling hard. There's been earnings. It's been all over the place. It's been very, very volatile. And sometimes things, again, negative on this thing. So now I gonna run my auto stop, my safety net, which I don't use too often. All right. Signal bar low, everything else 1 minute, going back 2 weeks here. So I run this, and all of a sudden I see this huge difference. And this is not even tweaking this. I didn't even optimize this. All of a sudden we're trading at 77%. All right. 31 points, $158. It's only trading one. Well, it's actually 5 lot, but it's only traded on the 1 minute time frame. All right. 76 trades, and 59 winning trades, 17 losing trades. That's on the 1 minute time frame. That I would consider the choppiest of the time frames, but again, successful, not bad, 77%. I think I could run 80 to 85%, 85, maybe even 90% if I'm keyed in. Let's move this to the 3 minute time frame. All right, let me show you something here. So they're going to move it to the 3 minute time frame, which I call the sweet spot, because going into next week, we're going to use the 3 minute, 1 minute, and 5 minute all on our screen, because each one of these are going to give you different alerts. So here we have the 3 minute. And again, we're at 77%. 77%. That's not bad. Not bad at all. 27 trades on the 3 minute. Now the 3 minute divergence and the 1 minute divergence will be at different points. Some of them might overlay each other, but most of them will be a little bit different. So you're talking multiple trades at different time frames. Now we're up to, 27 plus whatever, the 60 something, 80 trades, most of them successful, 77% if you have them both run. Now let's run to a 5 minute time frame. Now someone asked me recently, I didn't see any divergences on the 5 minute time frame. I said, all right, let's go out and take a look at this on the 5 minute time frame, which I consider the bigger the time frame, the better the setup, because it gives it more time. Now I still have a very tight stop on this. Well, it's a candle low stop. All right, 70, what is that, 73%, 73%. Again, the trades come down, 15 trades, 11 trades, 2 losing trades, 2 break-even trades. Not bad. Not bad at all. That's really good, 73. All right, and again, a nice 22 points, and that's just going out to 2. Let's throw this out for the rest of the month. Now, I hate doing back testing way out, but I want to just go do the whole month. All right, and let's just see what this is. This is running that one script. So if we were just running the script for the month, turning it on overnight, night, everything, and it's just running here. Let's see what would have happened here. I know if I try to do more than one, it takes a while. It's a memory hog here. Drum roll, please. Let's see if we got any. And I always like the 5 minute here. All right, so 53 points, 80%. We got up to 80% percent profitable on the trades. 40 trades, winning trades, 7 losing trades, and 3 break-even trades. Now, I like to break down these losing trades and kind of go into why they're losing trades. So we're going to take a look at the chart fast on the 5 minute time frame. Now, I don't have the stochastics up here, so I want to put the stochastics up here. Let's see if we can get that on there, the boards. That way I could measure out these. And I'm going to have to do a little deeper dive into the script and to kind of see what. But like I said, I want to give this script to you because it is actually performing the best right now. This is always a process. I mean, imagine this thing. Imagine that safety net that I have running is causing this. I want to see what exactly is going on here. Stochastics. Let's get to the stochastic area here. All right, so I want to apply that. So now we have the, oh, that's the 14.3. I want to, let me get the, shoot. We're going to move that to the 9.3. And actually I want to check the script. Maybe the reason that script is doing so well is because it's set on the 14.3, but I want to double check that. So let's just go back here and take a look at the results. And I apologize wasting your time on this, but this is really good. Now it does say 1 minute on here, and that's just because the label. Am I running the 1 minute? Auto style is running on the 1 minute. All right, so it is running the 1 minute script, even though I'm on the 5 minute time frame. All right, so it's actually a 5 minute script. Doesn't matter as long as it's a 5 minute script. All right, I want to see where our losses are here. Now there wasn't as many trades. This is going back the whole month. We have about 12 trades. 2 of them were unsuccessful. Let's just take a look at, this looks like one that failed. And I could see the divergence here with that candle taking out this low here, and there was a higher low here, and I could see that eventually came back, but that was the stop out there, and it was a little chopping. What time was that? It was 4 in the morning. That was one of them. Most of them are grabbing the bottoms here, and you're really just... That's good, that's good. This was a good one. I didn't pick this one up here. To look at that. That was a really good one. All right. And here's the, well, this one actually hit the profit there. That was a nice pullback, a nice divergence. That was a nice one. And there was a secondary one right here on the 5 minute. I tell you, the 5 minute time frame gave us some really good setups this month. And we got to concentrate on all the time frames. This is going to open us up for really big trades. But this running this automatically running these things are catching the bottoms, and they're not even getting the big move, all the moves here. I mean, eventually a trailing stop is going to come in. Let's see what happens if we would have put our trailing stop to like 8 and gave it more room to run. All right, let's go back to our summary. All right, let's go back to our summary. 80%. Probably, let's see, we have a little bit more running room. Let's see what happens here. Let's click on this. This is going out the whole month. Now, normally I keep those stops real tight. Give it a little runner. You're probably going to get a little bit longer, bigger trades, but you might also lose some. You might make more money, but the probability might be actually a little bit lower. What we're working with, 80. So we're sticking with that 80. The money did come down a little, it looks like 34 points. All right, well, 49 and 1. Didn't really change too much. Let's go back to that 4-4 again. And we're going to take 3 off here. Oh. We're going to move that to that. The fact is that we're going to have multiple time frames. That's what we're going to concentrate on. That way we have divergences on the 1, 3, and 5 minute time frames. Yeah. 80%, 50 trades, 47.3. A little bit better on the points. All right. Well, I was just doing a little bit more. I forgot to put the record button on, but this video is getting long as it is. The fact is, I want to get this Thunderbird auto stop script out to you guys this week and add that to the RockBot code. It looks really good right now. Like I said, the magic time frame here is 3 and 5 minutes. Let's see here, 8 on the profit, 40 on that. Let's take a look at 20 on that, 10 on the trailing stop, 10 on the trailing stop. Let's put that on. Let's put that to 12. 12. Just one more little back test here. Takes a little while to let this thing kind of do the calculations and stuff. You have an optimization tab on here. 76. The price is good, you know. 76, 13, 10, and 3. 3 losing trades. I'll have to look at that. Anyway, something's good going on here. I like the results of this. I think we could do better. I'll be working on it. Going to next week, we'll definitely be working on this. Just wanted to point that I kind of got sidetracked on this. I apologize if that was a boring for you whenever you're not trading futures. I sometimes do that, get a little sidetracked, but I think that's really important. There is a good, good thing that we're doing here. All right, we're going to jump to some stocks to watch next week. Now, for some reason, I got to like BABA down here. It's a little, it is risky because of the potential news. I mean, they're still dealing with COVID over there, and their President Xi is kind of off the rockers there now, surrounding himself with this Communist Party, and things have been coming out of China as more of a negative. And again, Chinese stocks are reflecting that. BABA here, extremely probably undervalued in a normal situation, but this is not a normal situation. But I do like that pullback here. We'll see what happens. 3-day pullback. Stochastics are hanging in there even though this is pulling back. I like the risk reward here. It's a little more dangerous, but I do like that risk reward. We're going to have some earnings out. We're going to also go over the earnings here because I think those will give us some opportunities. I went over a lot of divergence on the previous video that didn't come out with the earnings, and I again apologize that did not, well, at least I wrote down a lot of my notes. So let's just go through a bunch of, I had the notes. This is already getting too far into where my time frame. I'm trying to keep these videos like 30 minutes, an hour already. But look at, these are the qualifying HPS setups. Now, the NE back here, we kind of pointed out that divergence. You can see the big move. I wouldn't chase it at this point, but these are exactly what you want to be looking for. Recognizable pattern and divergences. There was a divergence back here we focused on, and now there was a divergence here we focused on. Look at the moves after that. So NE here just kind of set up and went. PSA here, another nice divergence here between this low right here and this little higher low and a series of higher lows. Again, they don't have to be something you have to get in right now, but always going back and seeing some good setups. Now I am in CGen here. This is a cheap one. It's just something I've followed and recently got into on this consolidation. Had a little pop on Friday. This looks good here. I don't know. This is a cheapie. I think this thing can pop. I really do. So in this one from last week, it's holding its own. Of course, you've had the earnings on Google that got hit, but a pretty decent reversal candle. And like I said, on most of these big, heavy stocks, when they do have the earnings, they tend to come out and move the stock down, or that stock reverses. And in the case of course, Google and Apple and Facebook and Meta, they all got hit. They're all down here, and they all seem to have finally gotten to a point where they are starting to reverse. Especially Apple. You can see the big reversal on Apple. You can see Google reversing. You could even see Meta, which has a big gap down here, kind of stabilizing in that 98 level. Now, I'm not saying that's not going lower. It could easily go lower on Meta, but it is starting to look good. And another one is the Boeing. And Boeing is on this week's watch list as one of the best bets. And I'm calling this a reversal can't. Even though you had that big down day, it started moving back up. This was an earnings candle, and after the earnings, it starts to move back up. This is typically very, very bullish. And if we get back above that channel line, I see 160, possibly even back up to 180 pretty fast. So going into next week, definitely like the Boeing. Unless, a wing falls off or something, some other type of news. All the bad news is out. The write down is out. This thing should head back up. Probably one of my best bets on Boeing going into next week. We talked about last week all the 5G plays. They were all perfect divergences, steep divergences. We circled them. Look at the moves that are happening. This could still have some upside. The American Tower. If you believe in the 5G, there's CCI is another one. Off the lows, SBAC. All of them. The divergences and off the lows. Costco, COST. Quality names all gave us divergences, all moved up off the divergences. Now they're probably all due for a pullback, but anything that has a divergence and gets a 50% pullback into the divergence should be bought. So these names that we're going over right now, you should be writing down, and you should be continuing to watch these. Dollar General is it breaking out? There's a breakout play for you. Dollar General into next week probably runs here a bit. Visa continues to look like a breakout here, and we're breaking down out of the downward channel. it's kind of extended, but that was also a steep divergence. And again, I cannot stress the importance of having a high rotation divergence. That second rotation, that second stage has to be a nice steep angle. When you have that in a reversal candle, it is off to the races. And all you have to do is wait for those. So there's some new ones coming. So the second best bet I like here is Disney. Disney didn't really take off. It had that reversal candle, everything else. It didn't really take off. I do believe, I have to see when Disney's coming out. If Disney's coming out with earnings, or did they come out with earnings? We're going to look at the earnings in a second anyway, but I'll circle Disney because I do want to look at the Disney. ADMA. Still pushing at 280. Blood plasma play. Looks fine. Still holding it. Nothing new on that. This one is back on my radar. Coop is back on my radar, and it's starting to show that sign of a relative divergence. I'm surprised it hasn't moved with the market, which makes me a little concerned. So we're going to look at that one, see when the earnings are coming out on that. I'll check that right after I show you the last one. Is the BHP, which is on the HPS watch list for this week. And again, this still looks a little weak, but if we start to see the this is typically what happens with the divergence. We take out the lows and then we start to turn back up. So we're going to watch for major divergences in the industrial metal trade, which we're talking Vail, which could, again, I have this line here representing if this starts to turn up, we took out the lows, this starts to be a divergences. All these stocks, the Vail, the BHP, some other ones will all start to go. All right. Those are really, really set up nice. Two-lane divergences on the list here is Las Vegas Sands. Now, Las Vegas Sands, we did trade this recently. We got the pop. We got out right about here on this pop. This candle right here, we got out, moved a little, then came all the way back down. It's probably time to get back in. Probably time. Big candle here. It's showing up as a divergence. You can see the high rotation, and it's just starting. It's not oversold yet, or overbought, I should say, and it's just starting to get going here. Still off the lows, but this is a pretty decent higher divergence set up there. And then Win, again, has Asia, has China exposure, so we have to be a little concerned on that. But look at the steepness of that turning back up. Relative divergence on this. All these look good. So Win actually looks really good too. Now I went over quite a few. So Win, Disney, Coop, BHP. These are the ones that haven't run. Paramount. Here's another one that could be setting up as a divergence. You can see a double bottom here. It hasn't turned back up, but we're going to also watch that one, Para. All right, let's take a look at the earnings for this week. Now you could head over to the forum, Day Trading Radio forum. I'll bring that up for you in a second here. Let me bring it over here. And again, I apologize. It was supposed to be much faster video today, but I just noticed when I was doing it how the script is really performing well, and I really want to dig into that and get that script out to you. So I had to do a little testing with you while you were on it. So go to Facebook groups, click and do a search for Day Trading Radio, and you'll see there's a nice trading group here at Day Trading Radio. That's what it looks like if you happen to find it. Go to groups, do a search for Day Trading Radio. I think it's all 3 separate words. You'll find this. It'll look like. The cover page will look like that. Oh, don't forget there is a sale this weekend. I almost forgot about that. Don't forget the sale this week. This Monday then. So let's take a look at the earnings for this week. This is just an overview. You could stop it and look yourself. I like down here because the high volatility, what we call the implied and move, how much the implied move and what the biggest movers are supposed to be here. So let's actually, I just hit our thing here. there we go. All right, well, nothing really on Monday. Tuesday we have Uber, SoFi, AMD, Pfizer, Airbnb. After the close, Airbnb. This is before the market opens and after the market. Oh, before the market, after the market. Before the market, after the market. So on Tuesday, Uber, Pfizer, BP, Phillips 66, Newmont Mining, Toyota, some other ones. After the close, AMD, Airbnb could be a big one. Some other ones, MicroStrategy. Wednesday, we got CVS Health, Generac, it's gotten crushed recently. Roku after the close. Roku, Robinhood after the close. Etsy after the close. Fortinet after the close. And then on Thursday, we're talking Cheniere Energy, Moderna, Crocs, Peabody, Datadog, Peloton, Nikola, PayPal. PayPal is going to be interesting. I heard a lot of people are closing their PayPal accounts because of this new fine that PayPal is going to levy on people. Misinformation fine. Coinbase after the close. Block, Square, Twilo. Just pretty decent ones on Thursday and Friday. We have Fubo, DraftKings, Duke Energy, Hershey's. But let's talk about the biggest movers, the potential biggest movers. Yell, average move is 19%, option implied move of 50% move. Yellow, I don't even know this one. Let's take a look at that chart. Yell. Yellow Corporation, trucking car, $4. So it's supposed to move 50%. It could move up to $2. It's pretty intense. Had a nice gap up, but pulled all the way back. That's a little gamble there. Little gamble. TRHC, CRMX, Carvana, CVNA. Nothing really big here. Avis Budget Rent a Car, 14% implied move. Liongate Films is down, coming up also. Well, there was a couple I wanted to check on the earnings, so let's go back and take a look at the earnings whisper. If I could do that fast, and then I promise you I'll let you get to your own research. Let's take a look here. So one is Disney. Disney already passed. August 10th, so no, it's coming up on November 8th, Tuesday, November 8th, so it's about 2 weeks. Consensus for 64 cents, Disney. All right. All right, so that's something down to look at. Paramount, P-A-R-A, November 2nd, that's Wednesday. And I want to see when Coop is coming out. Coop could be the big one. Coop, December 6th, so basically not for a while. Came out in September. I just want to take a look fast on this. 22 cents per share in revenues of $211 million. Considered was 9 cents per share. They beat pretty good. Revenues grew 17.8% year over year. Company expects third quarter 8 cents to 10 cents per share. Current consensus estimates was for 6 cents, so it's a little better. Expected fiscal 2023 earnings of 37 to 44 per share. Revenues, company previous guidance was for 21 to 27. So they're definitely increasing guidance here, but boy, it's not. It sure isn't moving. Let's take a look at what they did the last time. So they beat and raised. Oh, those are back here. They went from 57 to 62 and ran pretty good. Kind of similar to Net. Net had that nice pop too. Back here in August and pulled all the way back down. Here, this had the nice little pop and pulled all the way back down. I tell you, Coop got my interest. Coop has my interest going forward. All right, so that's our stocks on our swing trades. Best bet, Boeing with the divergence or reversal. I'm definitely keeping an eye on a little more risk in Alibaba if that could get a pop. The casinos look good. Las Vegas Sands with a divergence when possible. Disney, Coop, BHP also with a divergence. I like that one. Setting up BHP. Those could start running. Keep an eye. These are some that are lagging. And that's it. So everyone have a great weekend. Have a happy Easter. Merry, what do we call? Happy Halloween. Did I say Easter? Easter. I don't know where I get this stuff. I apologize. I'm not apologizing anymore. Let's deal with it. Next week we have a more concise and more organized video. This is the second time I'm doing this video. But we did run into a great script here, and you're going to get that script over the weekend. Don't forget about the sale. Sale is goes until Halloween, and you'll get that script, and you can use it. So if you need any questions answered, we have a new payment, what do you call it, options for those who are interested in it. I'll put that up on the screen fast just to kind of give you a look here. New payment options. The sale price $9.99, basically cut in half for what we're doing now, just on these special occasions, on weekends and stuff. 3 payments of $3.99, 2 payments of $500, or 1 payment of $9.50 gives you that discount. And of course, it gets you everything. Plus, we're going to get a special coupon here from NinjaTrader for that $100 off their lifetime platform. If you're interested in getting a lifetime platform, you get the courses, the bots, the tradeometer. There's so much, and of course, we're always there for you. So have a great, and I'm not even showing you. Have a great weekend. I'll see you guys Monday morning. Get ready to trade those short-term poppers and the futures. And like I said, I'm going to be setting up the charts in a different way. I'm going to probably do that right now. So have a great one. I'll talk to you Monday.